We now move on to what I'm sure will be a very engaging discussion on capital meets shop floor, which in many ways sits at the heart of India's manufacturing story. This panel brings together a unique mix of operators and investors who are actively shaping India's industrial growth. I would like to begin by introducing our panelists. First, we have Mr. N. Kumar. Mr. N. Kumar is the chairman of the Group Corporate Board of Sanmar Group, bringing over 4 decades of leadership across electronics, chemicals, engineering, technology, and finance. A distinguished industry statesman, he is a former president of Confederation of Indian Industry and chairman of the Indo-Japan Chamber of Commerce and Industry. He also serves as Honorary Consul General of Greece in Chennai. Beyond the boardroom, Mr. N. Kumar is deeply committed to social causes, championing education, healthcare, and disability welfare through institutions such as the Indian Education Trust, Shankar Schools, Maduram Narayanan Center for Exceptional Children, Balamandir Kamraj Trust, WWF India, Vision Spring Foundation, etc. We are honored to have you with us today, sir. Next, we have Mr. C Ganesh. Mr. C Ganesh is the president of Pratithi Investments, the investment arm of the family office of Shri Krish Gopalakrishnan, the co-founder of Infosys. Since its launch in 2015, Pratithi has invested across 100 plus companies, over 20 funds, and 20 plus sectors, managing over $500 million in AUM. The portfolio boasts 7 unicorns, 5 IPOs, and 11 acquisitions, with marquee names such as TVS Supply Chain Solutions, Unifor, Bluestone, and Bridge Health. Mr. C Ganesh brings deep expertise in corporate finance, business planning, and mergers, with a career spanning across Infosys and Cognizant before taking the helm at Pratithi. It is a privilege to have you with us today, sir. And joining us as well, Mr. Divyesh Dalal. Mr. Divyesh Dalal is the Managing Director and Country Head, Global Transaction Services, SME and Corporate Financial Institutions at DBS Bank, where he has been instrumental in driving digital transformation across cash management, trade, and supply chain solutions. With over 2 decades of experience across Citibank, HSBC, and KPMG, he brings deep expertise in transaction banking, corporate finance, and assurance services. Mr. Divyesh is a chartered accountant and a merit scholar from the Indian School of Business, Hyderabad. We are delighted to have you with us today, sir. And moderating this discussion is Mr. Vignesh Shankar, our managing partner at A99. Please join me in welcoming our esteemed panelists to please join us on stage. Thank you for joining us. Over to you, Vignesh, sir.
Check. Hear me? So, generally, these are the gentlemen who ask me all the questions while I answer. So, it's nice role reversal, especially with Kumar uncle. Uncle, how does it feel to be on the answering side for a change?
No, most of us, I know how to ask questions. I don't know how to answer. So, it doesn't feel good.
I hope you know not to ask the wrong one.
Sir, you are my team, so I'm going to go easy on you. But these 2 gentlemen have asked me too many questions, so I'm going to go after them. So let me, first of all, thanks for being here. I think, I hope we have not bored you too much, because it makes a lot of sense for us to say what we are doing. That's why we did that. Now, we very quickly get through this. We won't elongate the pain for you. So, Uncle, first to you, right? I've always looked up to you in terms of your early innovation outlook, right? I think, I don't know if many people know, I don't know if I'll still say it. So, digitally doing ECGs, digitally doing scans, doing CTs on the medtech side, the railway signaling side, the semicon side, the tech business, e-commerce side. If there was someone who actually started all of it and was pioneers for, and people like some large groups have learned of him, it's him. He doesn't talk about it, so I like to embarrass him by saying that. So, Uncle, the first question is, you have invested and deployed capital across 5 decades of Indian manufacturing, right? How has the access to capital evolved? Is it still, for manufacturing, is it still debt driven, or do you think equity is going to come in, the government push is coming in? How do you see it? And last question, I mean, second half of it is there a change in terms of how the outlook is, government policy, equity? How do you see this?
I think, first of all, let me thank DBS and A99 for giving us the opportunity to be here. And good evening to all of you. You know, Vignesh wants to say that I'm an old man. I am an old man. We started investing in the 80s, and we've continued investing all through. Initially, it was in electronics, and then we've been in engineering, and now in chemicals to a large extent. I think manufacturing has always been debt-driven. To answer that question, I think debt was the area where manufacturing came in. Capital was always limited in this area. So first, I'm happy that A99 is focusing on manufacturing. I think as India has 1.3 billion people, and with agriculture taking a backstage or staying simple, and as you said, IT becoming a little, it'll grow. It'll take some time to grow, but I think manufacturing has a huge opportunity of growing. India has always been a lower scaled manufacturing. We've always manufactured for our requirements. But I think the world is changing. I think India has started manufacturing for exports. I'm in companies where we either stop manufacturing for our collaborators. We have not enough collaborators in our companies. Or we export from Larsen Toubro, for example, they export to the US, etc. So to answer this question, I think over the years, manufacturing has evolved. We used to be manufacturing to small areas. Now we've become in scale. Without scale, India will not grow. I think that's something entrepreneurs have understood. And I think they're investing in things like robots and area. Even though we have labor in plenty, I think technology forces us to go into automation. So I think having been debt-driven, I think the time has come to become capital-driven now.
Excellent. Thank you, Uncle. DD sir, I'll come to you. I'll finish with KC sir. This is something that I want to drive a personal agenda also with. How is your allocation for manufacturing funds now? Are you seeing it change? I know traditionally some of the unicorns they mentioned have been tech and logistics kind of things. How do you see it, sir, from a family office, family wealth perspective?
Yes. So thanks for inviting me and elite audience. Good evening for all of you. So this, I think I'll just set the context. When Chris stepped down from Infosys and wanted to give back or do something, he had two things. One, can we jumpstart the R&D in this country from the private grant side? How do we do that, right? Should we set up our own research thing or just collaborate? Then he decided that it will collaborate with his own alma mater, which is IIT Madras and then IAC, and then set up chairs with foreign professors so that you can have collaborations and start. On the investing side, he said, okay, they were all first-generation entrepreneurs, so can we support first-generation entrepreneurs? And the first initial checks, which you guys are now doing, right? That's how everyone starts. Start small, support some entrepreneurs, etc.
So does that mean I'll have my own family office soon?
Yeah, surely, in some time, right? So the first checks which you wrote for Ampere, right, which was the first thing. So that's how you start. You start supporting entrepreneurs in the true spirit of supporting them, right? It's not just for the returns aspect, and that's how the ecosystem gets built. In the last 15 years of VC ecosystem, which is getting built, and we're just starting. So manufacturing is very, very key because that's, if you look at even US, even the bigger countries, etc., the bulk of the employment is generated by MSMEs, SMEs, right? And you need this entire supply chain ecosystem which feeds into each of these segments, sectors of manufacturing, whether it's textile or auto or aero or whatever. So clearly there is a push there. The thing is, we need more fund managers like you, and we need more funds, and and that's where, and obviously banks supporting and the entire investor ecosystem, and we're just getting started. So it's going to be more and more.
Okay, Ganesh, on a side note, we are getting our check, that's what he's saying, so it's a good thing. DD sir, so DBS operates across Asia, right? Singapore being the headquarters, China, Indonesia, Hong Kong. How often do we, India, figure in your board minutes, or what is the kind of spotlight you are giving? And do you think it's time for India to actually take up the lead and push up in your ranks?
Um, so I think a couple of things. First of all, big thank you to you and your team for this event. So I think from our perspective, DBS, within DBS, India actually ranks amongst the 6 priority markets, and I can tell you we are actually now the fastest growing market, even outside of Singapore and China. We in the SME side, which is where you invest in, MSMEs rather, I think we grow almost north of 35% every year.
Wow.
And I think from a firm perspective, we clearly believe that that's the white space. There is far more space to grow here. And most facilities also that you give out, there is more cash flow backed than your traditional way of lending. Given that the firm is always focused on digital, our models also have evolved, right? Right from balance sheet based to cash flow based, and then how can you obtain information more digitally to kind of move faster in terms of your TAT. So we've done that, I think, quite well, and I believe we have a sweet spot basis, which at least again, at the lower end, we've done some good work. I clearly believe that India, over the next, I don't know how many years, but at least the next 6-7 years, I don't see it as an issue. We will definitely, so right now we're in the top 3. That's Singapore, Hong Kong, and then between India, China, we keep moving. So you can imagine actually we're in line with China right now. Actually, we just passed them. So I feel that the opportunity in the country is real. It's just how deep you want to go. And it's again, whether you want to take a leap of faith on some of the tech that is going around the market. And to your point, I clearly believe that the opportunity is there in the intersection between tech and manufacturing, to be honest with you. And we've seen that a lot over the last couple of days. I was in Nasik actually, and met up with 2 startups where they've gone to tier 4 today, and they only lend to customers who have income in cash. And you should see the kind of stuff they've done using AI in assessing credit worthiness of the customer, and lending is not more than 3 lakh rupees, but it's fantastic. The NPLs are less than 2%. And the margins are like 900, 1000 basis points. So I think there is opportunity. It just depends how deep you want to go. The fact that we invested in Lakshmi Vilas and we've kind of got all of that network in, I think just helps us quite a bit. So to answer your question, firm is focused. India is up there in terms of share of mind. We are in top 3. To dislodge Singapore is difficult, but our current CEO believes we can, so I believe so. And I think, the intersection on tech and manufacturing is fantastic. And I think the current crisis will even make it accelerated even more, I think, in my view. What COVID did to digital, I think Middle East crisis will do to manufacturing. Fantastic. More than anything else.
Thank you, sir. Uncle, boardroom chatter. Okay, so you are a part of some of the large boards that it's public record, right? How are these large industrial players thinking of emerging manufacturing, Uncle? And are they actively investing, or are they still consolidating their large hold?
As I said, things have changed now. Take our own group. We've invested in Egypt. We've invested in Mexico. So I think companies are looking outside. Take TVS, they're doing in Indonesia. So I think today entrepreneurs are changing their mind. They're looking at borders beyond India. And this is boardroom chatter. This is area, for example, another company which is in the Middle East is looking at Europe, is looking at US. So I think Indian entrepreneurs are changing their mind. They're looking rapidly at being world leaders in this area. They're taking over companies abroad. They're helping their design go abroad. So I think you'll see a lot more, not only chief executives of India running American companies, you'll find a lot more Indian companies going abroad.
Fantastic.
So actually to Sir's point, again, a very relevant life case, and auto ancillary company in Nasik actually is evaluating it is not more than 250 crores. They're looking to actually buy a good asset in Italy because it's a family-run company, and because of growth challenges in EU, a Nasik company is actually looking to acquire.
Wow.
And the challenge is they don't have an investment bank in Nasik, so they don't know, in terms of sell side, buy side, who will help them. And they don't have banks or private equity guys or VC guys out there, so they're struggling even on capital. And so I'm saying that you now see this in tier 2, tier 3, guys who are really good. And that's where the opportunity is. Unfortunately, I think all of us get colored by metro so well. So I'm just giving you guys a hint. Yeah, you should travel to the hinterlands. You'll find more.
So I always think tier 2 and tier 3 is going to lead the manufacturing wave. So we are aligned
That's
with
true
you.
even in services. Example, that's the area where it's going to grow. If you see, for example, Tamil Nadu, you will look at Coimbatore, Salem, Madurai, the growth there is outstanding.
Correct.
Yeah, actually, to Sir's point, it is quite surprising when we went and checked one of the fintech startups tech unit in Nasik. Guess what was the cost compared to one in Bombay? Take a wild guess. It was 20% of Bombay.
Wow.
20%. Labor cost was half of what it was in Bombay. So I think the cost dynamics are very, very favorable, and attrition is sub 1%. Nobody quits.
Wow.
So I think it just depends on how deep you want to go, but there is significant opportunity.
Great. Sir, so as a family office, right, you look to generate wealth for your this one and grow it. So what is the preference, sir? See, we always want to exit. Do you think staying invested, longer investment cycle is something that we should look for the manufacturing segment, or you should take the exit as they come? And as a family, how do you balance?
Yeah, so it's completely different between a fund manager and a family office, right? A fund manager has taken money from LPs and they would need returns, and we are far away. There is probably, I think Sequoia has tried in the US of a permanent fund. It makes sense after some time, and SEBI has not yet thought through of having permanent funds. So obviously there is a time-bound thing, and there will be new investors. Finally, you are helping the company to go to IPO. So there is a person who has to come at the Series A or the idea stage, and then there will be some amount of traction, and then Series B, and banks come in, and et cetera, et cetera. For family offices, we would play with funds at late stage and sometimes stay on. Early stage, it's mostly funds, right? Because funds are taking more risk. We are not doing that. We are doing it through funds. Late stage, we continue to stay on, right? And ideally, yeah, if you're lucky, obviously good companies keep compounding. So there's no reason you want to exit.
Lovely. I think the manufacturing party has started in the other room, but anyway, so we'll wrap this up quickly. DD sir, to come to you, right? See, we spoke about leverage buyouts. If you remember, you were saying that that's the structure that India needs, right? I think there's a lot of it is going to happen in manufacturing, okay? And how much is a hard asset piece of a manufacturing business make difference to you when you're doing such deals?
So look, I think, so 2-3 things, right? One is the hard asset is at a point in time. So I'm sorry, but I'm a C and I'm making this statement. We always like to look at the rear view mirror, right? When we drive sometimes. So you look at a point in time what the hard asset is to see, what actually backs the lending. But I think increasingly people have, including banks, have started looking at cash flows far more closely. And it actually stems from how you do small ticket lending on large volume. That gives you insights on, how do you look at, cash flows, built-in governance around it, COC, all of that. So change of control, etc., always helps you. And if there is good potential for the guy to, push up, then I think cash flow still plays a very big role. Obviously, hard assets do, but it's tricky even in IT. When you go in IT, it's even more tricky. IT with an intersection of manufacturing. It is tricky. It's not easy to do. But therefore, I think the cash flow plays a big role. And we believe at least that at some point in time, you do look at the promoters, you do look at, who the sponsors are. And you do go with that more than anything else, because that's where the insights are more than anything else.
Fantastic. So, Uncle, to you. This is a chat that we've had privately. When I pitched businesses, manufacturing ideas to you, you have said, to quote you in Tamil, "Ippa enna pandran paakada, what they are enna pandra under the product." So to connect that to R&D, right? So how do you think historically? I think we have underinvested in R&D in India across segments. But if you have to compete and if you have to build a strong base, how essential do you think R&D is, and what can we do better?
I think R&D is critical. I think all of us accept that area. India's come into stages in this area. As you said, I started very early in R&D. But, we didn't have the muscle to compete. Now you just hear your A99
you can't
investors.
say you don't have muscle.
No, I'm saying just look at your A99 investors. All of them are new technologies.
Correct.
All of them are invest in R&D. They're now scaling up. So I think it's in India, Naushad Forbes, just to relate one guy, said that we need to invest 100 times more than we're doing in R&D as today. And I think that's where people like Chris and all are also pushing this envelope. I think R&D is critical. So I'm happy that IIT, for example, in Madras has done a development area. Other institutes are doing. I think this industry institute partnership is a critical area. But I think because while industry is there, I think the future is in the new students coming out. And we have to expose them to new technologies. And I think that's the critical area where I think today government is playing a huge role. As you said, this government has helped a lot, whether in the schemes they have, the electronics things are coming up, which I wish they could have done 20 years ago. We should have done that. But, better late than never. So they've now started doing it. I think the second push is to universities. I think both industry, universities, both have to look at each other and start growing.
Fantastic.
So in that, actually, we always keep thinking about this, and like they've done in CSR. I clearly believe that if the government identifies, the end use as just R&D, and identifies universities where you can, or even non-universities, and make it mandatory for a corporate to do even 0.5% of the PAT, just push it as R&D fund, and that fund actually goes into this. I think it'll be far more easier, because today the drive and incentive is so it's difficult. You have to be seriously passionate for it to work, right now. So if the funds are easier from the other side, like CSR is, I think it'll work very differently. So it's a little change in mindset at that policy level, because what we were 2 decades back, is water under the bridge. We could have done better. But now I think India clearly, at least the corporate side, 0.5% is nothing. And if you do that, I think it'll have serious impetus, in my view.
Just to add to this, the only problem with corporates having both CSR itself is forced, right? They would want to do it themselves, right? But we had to get there. The problem with the R&D thing is your quarter se quarter tak, right? Investors keep looking at your share price and asking questions. So anything on R&D takes a lot of time, and now government is actually really doing the whole stuff on the Anusandhan Research Foundation and the RDI fund. It's really going to give you a long-term debt at 3% and other stuff. So banks come in, and then promoters come in, private capital comes in, funds comes in. I think you can fill all the gaps. And we still are looking at, government is ready to give $12 billion, right, over the next 5 years. So it's big money. And so funds, fund managers, and even companies can actually deploy that to pure R&D and then deliver. IP-led manufacturing is key, and I think we are all seeing all the examples in the portfolio as well. We need to create a moat, right? The moat has to be there. Otherwise, it's not just replacing what is done in the US or Europe here, right? We need to have moats. We need to build that IP and get the price for that, get the premium, get the margin for that, and that's great.
But I think finally it's up to the entrepreneur. I think, we can say government should do this, industry should do it. It's really the entrepreneur who say that this is the future which you need to do.
Fantastic. See, I have a few more questions, but I think we'll stick to common questions so that we can wrap this up. But a lot of people have to make their flight, and I'm sure I'm boring you enough, so we'll keep it this one. So if there are any sectors for each of you that you think that we still have not done it in India in manufacturing or infra, what would that be? Or something we can do better?
Pardon?
Something we can do better.
No, I think electronics is something you said you started OSAT. I think all this electronic semiconductor manufacturing is something you could have done better. Green hydrogen, these are new technologies coming up. The rest, what you said earlier, build to bill or build to print or something like that, that is happening. That has to happen. That's got to be 70-75% of our business. I think the balance 25% has to come from new developments in this area. And I just gave you 2 examples. One is electronic. Subcontract manufacturing is becoming very large now, scaled. Look at what Apple is doing in India. Green hydrogen, the other area is renewable, because that, especially with the war now in the area, this becomes a very critical area. Cost is secondary, availability is primary. So,
fantastic.
Yeah, I think, given that a substantial portion of the labor actually goes into agri, and the knowledge levels out here there in terms of use of tech, etc., is a bit challenged. I think the space out there in terms of, growth, the delta is significantly high because today there are lands which are in part, they don't know how to leverage in terms of, get capital to kind of do more. How do you buy urea, fertilizers, etc., all of that, and how to use tech. So there was a Bangalore-based company, which I forgot the name, but it had developed something called Fitbit for cows. So it told the guy that went to milk the cow based on the temperature of the body. And then they actually proved that it is easier. I mean, you could kind of get more, from the cow itself. So they used that and then they actually pushed it through the dairies also, right? So they were storing it at the right temperature, etc. They were helping the guy also quite well. So I think some of that has to come across in agri because whatever we do on manufacturing, you'll still have a significant portion of the population sitting there. And I think the biggest challenge as a country we have is that you will have a section which is significantly below, then you will have the mid, and then you will have people right at the top. So you need to pull the bottom up at some point. I mean, Manrega, etc. is fantastic. PMJDY is brilliant, but you need to get them up. So tech is the only way you can start getting these guys up without hitting the cost line a lot. Yeah, that's my view. Sorry.
Great.
Yeah. So just to add to that, and so two things. One, something to do with real R&D, right? Which is you just go into a hospital and figure out, right? 90% of things are imported. You have no IP for any of the things which you use even at home, right? So that's a big thing, and which government is very clear. What they just want to replicate what ISRO has done for Army, Navy, and Air Force. So the next generation defense, etc., etc. And we have already seen in Operation Sindoor what all technologies we could use. So many players who can play into that growth area. On the agriculture side, as you were saying, right, there is huge potential. But the thing is, it has to be led like the Amul model, right? Can we create cooperatives? Can we double the farmer income in ways using technology as well as collective stuff, and how you fund that? Deeply, I still believe that wherever we can create moat through R&D is where it's going to happen. And I still, as he was pointing out, the university ecosystem, the IITs, and how the industries come together is where it will happen. The 1960s, 70s revolution, which US led it, and US is now benefiting out of it, and it continues to benefit. That can happen only when you start the flywheel, right? And that has to happen. It will take 10 years, but already we have seeded, and I think that's where we see huge potential. And we are doing phenomenal cutting-edge R&D in this country. So we don't need to go to Stanford and MIT to do it. We have an IIT Madras where we have sliced a human brain. We have mapped the human brain for a 12th week to the 24th week of a fetal brain. We have published it, and it's open source. We have already done mapping of a human brain, which is 2 petabytes. Imagine the entire Google Maps street view across the world is 16 petabytes, and one human brain is 2 petabytes. And we put it on a computer, and anyone can access it. And this is like, no one in the world has done it, and we have done it. Wow. And it has about 6 to 7 IPs, patents, which is still to be leveraged, right? But it's all possible, right? And we have seen in our own portfolio guys working phenomenal work, great work. I think world is just changing, and India is at the cusp of growth. And to add to what he was saying, we have a Belgium type of per capita with 1% population. We have an Indonesia population, which is Indonesia per capita. And we have a huge population which is almost can fall back into poverty line if it's not funded. So we are not, when we say 2,500 per capita, it's not 2,500. It is, we have huge per capita guys who are doing it. So how can we move this pyramid more faster?
Okay, excellent. So final question. So all of you have seen cycles, right, where there was a fad for every season. There was a SaaS, I think SaaS is still good. There's AI, you've seen defense. So you think manufacturing is a fad, and how long will it last?
No, I think manufacturing is not a fad. It's a continuing process. The way of manufacturing may have changed. You have dark factories coming up. You have new areas coming up. But manufacturing is still manufacturing. And the other one you said is infrastructure. I think these two are the foundation of any growth of any area. So I don't think it's going to go, it's going to be there forever.
Thank you.
Yeah, yeah. Humans are social animals, and we felt that during COVID, right? Everything we could do was from home, right? We ran, but it cannot last, right? And then if at all it worked, right? We could do bank audits sitting at home and finish off and do AGMs. Then commercial real estate would have died, right? But it doesn't happen. Man is a social animal, has to go out and has to experience, so you have to create infrastructure, airports, ports, and everything moves on ports. The Strait of Hormuz, we know the problem. So I think manufacturing is not going away, right? And it's more and more will happen.
Thank you.
You know, in my view, it's all in the mind. I think if you put restrictions in your mind that this is probably moving down, it'll move down. So you have to look at it from a different lens. How do you get the next wave of growth? That's the only way I look at it.
Thank you. Yes, sir.
Thank you. Thank you.
You've been an exceptional panel. I hope I was an exceptional host. So
Thank
you
you
so much.
So much. Thank you.
Yeah. I hope it was interesting, right? I don't know.
It's very interesting.
Thank you to our esteemed panelists for a highly engaging discussion. May I now request Mr. Sushant Shetty to kindly join us on stage to felicitate the panelists. Thank you once again to our esteemed panelists for joining us today. With that, we now move to the closing note. I now invite the calm to our storm, Mr. Ganesh Satyamurthy, partner at A99, to deliver the closing remarks.
Yes. Hello, everybody. Vanakkam. So what a fantastic evening it has been, right? So thanks to everyone for turning up here. So I think the first I would like to start off by thanking DBS for organizing this beautiful evening, wonderful event, right? But that also goes hand in hand, with thanking Vignesh. So Vignesh is a kind of a guy who will rehearse something 100 times and make me also do it with him to ensure that everything goes very well. And this is the result we have today. We had a fantastic evening. We had a seamless session. Right? For all our esteemed panelists, Kumar sir, KC sir, Mr. DD, it has been very insightful. We are glad to know that India is on your top 6 priority lists globally, right? We are R&D, the kind of R&D that we are doing in India. So we are an R&D based fund, but still it is fantastic to hear from you. It is a testimony to the kind of R&D that India has been doing, right? And to all our investors who have come here, so thanks to all of you that has made this day very special for us. Our new fund that has been launched, $100 million, 850 crore fund, from the time we got the SEBI license, we crossed 100 crores in subscription, I think exactly on day 7, on day 8. So that is no mean feat. And that is thanks to all our investors reposing faith in us. See, there is one very important element here, right? Thanks to investors, not only in this room, not only for A99, but investors across India. There's a lot of domestic capital in India today, right? That is funding all the private capital. Earlier, we used to be dependent on foreign for investing in private equity, in investing in venture capital. Now, domestic capital is funding this. What this essentially means is that here is a generation of Indian businessmen, industrial families, the big corporate sector, who is now funding and investing in creating the next wealth builders and wealth generators of India. So that is our country, Bharat, has also matured to this stage where people are investing, and this investing cycle is going to go on till we reach Viksit Bharat, right? So that is an amazing situation, isn't it, right? To all our friends and our portfolio companies who have joined us over here, so special thanks to all of you. Our investors put money in us, we put money in you, but you are the real heroes. So you put our money to hard work, you do the hard work, you give us the returns so that we are able to give these great returns back to our investors. It goes to the community, then it comes back to fund you once again, right? And to all our friends who have joined us from across India today, we have a lot of people from Bombay, so we have people from Kolkata, we have people from Bangalore, we have people who have come across the countries to join us today, right? So we are only thinking, what have we done to deserve this kind of an audience here today for us, right? And we are grateful to God, and then we are grateful to all of you for being here, right? So thanks, you have made this very, very special for us. And lastly, the lovely MC that we have had, thanks to Varsha. So can you believe it? She's our lawyer and she's our complaints officer of our fund, just for establishing fact, right? So thanks to all of you for being here, making this a very wonderful evening. Now, let me not, stop you from going to your drinks and dinner, right? So over to you, Varsha.
Thank you, Ganesh sir, for your closing remarks.
Okay, so there's always this, I used to love this thing about Steve Jobs. There's something called one last thing, right? So he'll make everyone wait and then talk about one last thing. There's one last thing what we're going to call out now is something that is private to our firm, but I think this is the right space for us to make an announcement, right? So we were a 105 crore fund. Today we are a 850 to 1,000 crore fund. We have grown in size in terms of fund size, but as a team we have remained very small. We are just still 10 of us, and 10 of us were able to pull this event. But the top load is getting heavy. It's getting heavier as we speak. So Ganesh and me have been having this in contemplation for a really long time, but for factors beyond our control, we couldn't get it done. But now I think we have controlled everything. We have our newest partner. We have Asha. She's joining she's going to put up with me and Ganesh. She's going to be the new partner of our fund. Thank you, Asha. I know you're going to hate me for this, but I think you deserve this. So you can ask anybody, any of my investee companies, any of my teammates, anybody, if there's someone who gets job done in my fund without getting angry, which I always get, or without being too calm, which Ganesh always is, it's Asha. So I think she's really put the firm ahead of even her own family, so I'm very thankful. So I know you're going to hate me for this, but you deserve it. So it's our newest partner, and she's the big boss. And please, all of us have to kiss her ring, okay? So thank you. That's about it. Please enjoy the drinks and dinner. You've been a lovely audience. I hope we've entertained you enough. Thank you.
For joining us this evening.